Okay, hello. So this is Tuesday, 17th of December, right here. So remember, Monday, let's start off with gold as usual. Now, Monday was a swing day with gold, okay? And yesterday I did actually post on Twitter. All right, so if you're okay, if you're following Twitter, you should follow Twitter because, okay, here it is. Okay, so that was the hour. I said if you missed the early bird, you can catch the after one as well in the afternoon. Now here I also said charming move, already up 2-1 risk return. Just cover trade and follow through. This is important, as you need to know. Why is it important? Because, okay, this was yesterday going upwards. So once the market comes into your daily pivot zone, you understand this is resistance zone, right? And if we break out, we've got 1 to 5, 1 to 10, 1 to 15. I had something there, as you can see up there, okay? But if you've learnt from me, you know the importance of covering the trade and follow through. All right, so that is trade management. So, okay, so if you're not following Twitter, make sure you do. Now, this is an impulse wave. This is a retracement pushing further down. Now, as last week as well, remember last week too, I said this is a very tricky zone because we're in the middle of levels, right? Ideally, you want to buy low, sell high. So selling here last week was okay, and buying here was not okay, but buying the next day was, remember? So the market pushed up on the pullback. We were okay to go long, okay, because there was a pullback into Thursday, Friday, and that's your Thursday, Friday selling off. So Monday is a swing day. So Monday can still be a swing day. Okay, it hasn't broken the low off Monday, as you can see. And as you can see, I don't have any open positions now. Why? Because once the market goes up, I cover the trade, move stop forward, and if it does come back, then, you know, like I'm out of the game. Okay, obviously no loss, but still you're covered and you're managing the trade, so it's all good. So this zone, as long as we don't go below the low of Monday and stay underneath it, you know, break below it, then obviously we're still Monday swing day. So what to do? Well, I've already posted the hours. Let's get rid of these. What's this doing here? Okay, I've already posted the hours, and this is now, as you can see, that's that. Let's do it like this. That's the impulse wave. And that is the sideways market consolidation. All right. So there are two things that can happen here. The market can buy the low, okay? Or we can keep pushing down, okay? Both an option. If this holds, then, like I said, the market can still go forward. But guess what? Yesterday this was okay to buy, but now we've got a breakdown. Okay, so once we have a breakdown, okay, it's not a good idea to be standing in front of it. So on the weekly, we can still push down. Okay, so we'll have to sit tight a little bit and see how today pans out. Maybe we'll fall into the next swing day coming up. We don't know. But if the market breaks below, which it has here, if at a swing hour you want to pull on a pullback, you want to, if on a pullback you want to sell, okay, then that might also be a possibility. All right, but if you're going to do it, you got to do it high. Okay, so sell on the high, and if you're going to buy on the low. But because we have a breakout, like I always say, don't stand in front of a breakout. Okay. On the weekly, Last week was good, touch and go. But this week, we may have room to come down. So don't take risk in the middle of nowhere. See how it goes. Okay. Rightio. Also, if you take a look, this is like, at the end of the day, still lower low, lower high happening, as you can see. All right, so market may still push further down into those levels that we marked. If we come here, definitely we're going to be buyers. Let's take a look at the euro dollar. With the euro dollar, Monday, that was a swing day. Friday was a swing day. So Friday, Monday, market pushing up. On the weekly, okay, as you can see, we're right at the push up there. Okay. One little drama is this could be a consolidation. So if you're going to buy, you're going to have to buy the lows, as you can see, and you're going to have to watch for stop sweeps along these lines. And that's basically it. It's a little tricky here. So if you want to sell, do it on the high. You want to buy, do it on the low. Now 37, 1.0451. 0451 is here. All right. So the market can still push down in essence. Okay. But yesterday, like gold, this was also okay to go up nice and easy because of that swing day. All right. Obviously, this wasn't a good place, but this was, and yesterday's hours, let's check it out here. Come on. Was somewhere there. Okay, so that was the market pushing up into there, as you can see. Okay, and then we had the night time. Was it? I think it was 8:15 or 8:30, around there. And that's basically it. Okay. And then we had, 11 o'clock, I think it was. Somewhere around there, which would have been 10. What's that time there? 9 o'clock. So I didn't have a 9 o'clock. That would have been the zone there. Okay. And then the market pushed into there. So basically, the only thing that could have been done yesterday, buying the swing low. Why? Because it was a swing day. Okay, so it was a swing day, the market, Friday, Monday, following upwards. So the only thing we could have done was to buy on a pullback. Okay, and that's basically it. Today, what to do? Today, as you can see, we're in the middle of the range. Now look, that's the high, that's the low. So likely that this might break down all the way into there. Okay, and that could happen because that 41, as you can see, is somewhere around here. Okay, 1.0441. Okay, so this is a zone. That's one zone. Okay, so if the market dips back down here, then this swing day will no longer be valid. All right, so what to do? If it's a swing hour, I don't know what to do because it's not a swing day. So we'll have to wait and see. Okay, if we keep pushing up, then we've got room to come into 55, which we already marked in. 0590 it was yesterday. 81 is today. There. All right. So we'll have to see. But this is looking nice and bullish because there's a breakout closing above. So at trading hours, if we come back down again, close gaps, this zone here, close gaps, this zone, okay, is also an option. Okay, so if you want to buy the low, low, low to go up. If the market breaks out, yesterday I said 0535 was on the cards, and you can see they sold off from there. So why? Because that 35.0520, so we must have had a 35 somewhere. Let's get rid of that. Okay, and 0555, 0535 was probably here yesterday. Okay, the red line here. Today it's 0532. So yeah, like if you've got a position open, move your stop loss to the low of yesterday and just follow through. Okay, because if it keeps going up, there's room to go up, and because Friday, Monday was a swing day, it's like logical. Okay, and your trade should be covered as well if you did what I said, which is trading hour buy a low to go up. So your trade should be covered already, because if you went long here on a swing hour, your stop loss should be under the recent low, which it did here, and that's basically it. All right, so if from the lows, closing gap from the lows, you see a market going up at trading hours, it's doable. Today there aren't a lot of trading hours, so this 145 235 my time is not a bad idea. And then we've got New York session 5 past 4 to 4:45. If that works out, it should go all the way into the evening. And that's that. Let's take a look at SP500. Yeah, SP500 was a bit tricky, as you can see yesterday. All right, why? Because we're in a triangle, but the market's still pushing up. Okay, and we're in like a squeezed up mode. Now, what's helping us here? What's helping us is we've got a breakout. So it's good to see the PST indicator giving us a breakout. Why? Monday was a swing day. Now, the next swing day is already on the website. So, can the market keep pushing up? Okay, can it do that? It certainly can do that. So, if we're going to day trade it, might not be a bad idea. If during the New York session you want to buy to push it up. Okay, so generally that's the situation. The market is still blissful. All right. So where to do that? Okay. The weekly pivot's good. If we dip back down, let's rearrange this. Okay. And yesterday being a swing day, you can see that the market did a nice, going all the way up is good. Now got a bit of a retracement. Now that retracement, if it's like coming back into the weekly, is there a gap here? There are no gaps here, so it's all good. And the market closed above the high of Friday. No, it didn't close, but it went above and closed a few bars above until it sold off. So if the market dips back down into the weekly, the lower end, then going back up may not be a bad idea. There are no gaps here, slight gap here. So if we do dip down, the weekly is good to kind of go up if the market is at a trading hour around here, and so is the previous day low. Previous month's high is also okay. All right, so if we dip further down, all right, because there aren't many hours, you can just basically work off the few that we have with a tight stop loss. It should be fine. Dow Jones, same kind of thing. Swing days, as you know, this week is a little tricky with the Dow because unlike the Nasdaq and SP500, we've got a few things happening. So let's check it out. Dow Jones, yeah, we've got room to come down. As you can see, it's nice and easy. So this was yesterday. Yeah, yesterday we were at the limits here. I did say there could be a little bit more push down. So yes, into that zone. Okay, remember yesterday I said, despite the fact that we have a swing day here, we got room to come down. This is where we need to enter. So market coming down nicely. So now we can get rid of this. This was a nice target last week. Market bouncing off it. Now we're going to have to wait for it. Okay. We have to wait for it. Let's see if we can do something from here to here. Okay, so we might have to wait for that zone. Okay, which is fine. Until we get into here, buying for day trading purposes, it's not really worth it. The market should later break all the way into there. If we go back up again, we'll want to sell, okay, in January to push down. So mark that bar on your daily. We need to dip down, draw your trend line, dip it down. When we come down to those levels, then if it's at a trading hour, if you want to buy for a day trade, you can. Okay, but only if we're down here. This is also going to break sooner or later. Be mindful. Look where I'm expecting the market to come down to. Okay, so these green levels is where we should be coming down to. And then we're going to have a hell of a time when the market gets depressed. All right, so we'll keep that in mind as well. All of those in between levels, they are gonna be challenged. Okay, so but in the interim, as you can see, this is just going up nice and easy. We should have a big smack down later on, so you could wait until tomorrow as well. No rush really. Let's just see what it does. You don't have to rush a trade. You should get a good impression from what we're entering. Let's take a look at NASDAQ. Now NASDAQ, okay, so Monday, obviously that was like a push up. Okay, so that is Monday. All right, now with Monday, remember I did say it's a little tricky. Why? Because we've got to push up, as you can see. So that could go all the way up and make a high furthermore in there. Okay, so that was a bit tricky. If you sold on this, okay, because I did say we've got market levels to go up, the only place you could have sold is there. Okay, and that was 445, which we didn't have a 445. Okay, yesterday we had 6515, I think, or 415, somewhere down here. Okay, so we had a 415 down here, but we didn't have anything here. So the market, as you can see, just burst up. Okay, what is good to see is at the end of the day that, you know, it was a up move, which was a breakout, because a swing day is either going to break you out or turn you around. So that turned out to be a breakout, which is in compliance with the PST as well. This is the same thing with gold. Remember, that's why I said with gold, don't stand in front of it. It's going to go. It's going to go. All right. So same with that. Now what to do? Well, this should kind of sizzle back down a little bit. As you can see, they didn't leave any gaps along the lines there. But coming back into the daily or point of breakout is also logical, since that's the move. Yeah, coming back into Yeah, I mean, if you're going to buy, you got to wait for it to come back in. You can't buy at the tops, that's for sure. If you want to sell it, don't do it. Why? Because we've got room to go. So if it comes back a little bit, let's say, what's the closure of that? That is 21,889. So 37.5 would be nice. Okay, if the market dips down here, from here going back up is okay. If it does keep pushing up, then tomorrow there's a highly likely, if it keeps going up, they'll slap it down. Okay, so don't get all excited. The only way to follow an impulse is on a pullback. You get in at a nice level where the market broke out, matches the Fibonacci, and there's a timing to it. You can follow it up. Okay, and the better level is obviously below the 50 zone, right? If it doesn't come back but it keeps pushing up, you need to understand they're going to slap this down from a level, and that could be midweek. Okay, something like, I don't know, something like a boom like that, something like that, boom, before going back up. All right, so don't get caught in that. Okay, but there's still targets up above 76, 77. Note them down if you're trading NASDAQ: 22,290, 22,433, and 22,588. So the closest one you should target at 76. On the weekly as well, because it's now an up move, 21,954 may also be a level. 21,954 is just going to be there. So the market, if you want to buy properly, is going to be at least doing the 50% or 37.5 retracement at your trading hour before you think about buying. And like I said, if it doesn't pull back but it keeps pushing up, then tomorrow we'll look for a sell on that. Technically, it's not a swing day because Dow Jones has a swing day, but NASDAQ and S&P 500, they don't. They had it on Monday. That's a big Monday. Nice. Bitcoin. Now, Bitcoin was already like up yesterday. All right, so like Bitcoin was already up here. I did say if it pulls back, you can get in, and that's pretty much, there you go. All right, that's 250 on the platform. All right, what did we have yesterday? We had 335, so 235. There you go. All right, so that's pretty much how things turned out. Okay, and then 15, when did it start? Yeah, it started pushing up there, as you can see. Okay, so nice and easy. It came back to that level I said it should before you want to do anything. If you want to day trade it, you should have been fine. Market's going up, room to go up, all good. So yeah, basically, do you want to go further up? Well, it's like a gold rush. Should we do it? Well, it's just too bloody high for my liking. It just is. We're getting a bit of a divergence here. The only time, I mean, it's a bit crazy. Bitcoin swing day is not yet. Okay, so if you want to buy again, you need to be careful for this third touch here on this line. Draw this line. This third touch is going to be important. Okay, and that's it. You know, if it does touch there And if they slap it down, don't be surprised. If you want to buy today, you need to wait till it covers the gap here. So if it comes back down, this is pretty much your zone. Okay, if you're going to day trade it, I'd just do it with caution, okay, because we're like right at tops and high levels here. So maybe Thursday they'll slap this down and we'll see how it goes. All right, but the swing days are not today, and you have to wait for them.